Vincenzo'S Go Crypto Investing this June the 12th, 2025 nightly altcoin daily cryptocurrency, the blockchain technology and altcoin video. Uh, we ask you to bell notification, comment down below, subscribe to the channel, become members of Jabroni Killer, video description and/or pinned comment. $3.99 a month, cheapest and best value out there to help support a channel that's there for you, the retail trader and investor. And that's why we started this station to spread the word, the movement message on investing. Super simple and easy uh, to guide your way to becoming an investing millionaire and change your standard of living via several different diversified portfolios, gold and silver bullion and mining stocks, cryptocurrencies, 401k investing, um, and stocks and real estate, right? Steady investing over a long period of time and cash. You have to have cash. There's always a reason to have cash. You can see the market's down a little bit today as we've been expecting. And here's how we tell you a little bit of tidbits of new information and news on investing to help you get the most information and education you can. Having some cash on hand, as old Vincenzo recommends, rather than keeping everything invested in the market, is a key part of a smart balance financial strategy. And we're going to go over a few reasons why that's important. And we've been talking about this since this channel started. We need to be well-rounded and steady ongoing investments over a long period of time in order for that money to start compounding on itself and start rewarding and gaining exponentially as time goes on, along with steady purchases in those investments and being well diversified. Emergency readiness, unexpected expenses happen, medical bills, car repairs, job loss. That's something we've talked about on this station, right? If something happens, say you need a new roof and it costs $18,000 and you don't have that cash and everything's in the market, now you got to sell something. Well, what if the timing's not right? What if the position is down because it was in a downtrend and now you have to sell because you don't have any cash? Now you're taking a loss that you wouldn't otherwise take, right? That's why it's important to plan and look for things that aren't wrong but could possibly go wrong and be ready and have a way to fix them and attend to them and to take care of the problem. If all your money is stocks, if all your money is in stocks or crypto, you may have to sell at a loss during a downturn to cover urgent costs. Rule of thumb, 3 to 6 month worth of expenses or high yield savings, right? In cash or high yield savings. Like right now, the high yield CD would be about 4% a year right now. Still, if market crash and you need money, being forced to sell in a downturn locks in losses versus if this position goes down and you're in stocks or crypto, you can, if you have cash, that's a great time to add to your positions or to buy new positions in market crashes. And that's where most money is made in market crashes when people buy and hold and wait for the next pump. Cash gives you stability and flexibility so you don't have to sell low. Opportunity funds. When markets dip, having cash means you can buy assets at lower prices. Smart investing, keep dry powder ready to capitalize on dips, e.g., COVID crash, 2022-23 bear market. Because even when the major markets like the S&P, the dollar, the NASDAQ go down 15 to 30%, individual big time stocks can go down 50 to 75%. And it's a great time to buy those. All in on the market equals high volatility. Keeping a portion in cash helps smooth returns and reduce portfolio risk, especially if you're near retirement or need stability. Psychological peace. And this is what it does for me. Cash acts like a financial cushion. Knowing you have liquidity improves peace of mind and reduces emotional stress during market swings. Bottom line, cash doesn't generate big returns, but it offers liquidity, safety, and strategic advantages. Think of it like oxygen. You don't think about it until you desperately need it, right? So you don't need to have a lot of cash, but you should always have a little bit of something on the side to where if there's an emergency at home, medical bills, loss of a job, or just the price of something that you want to buy goes down, like what we've seen today now, there's been, especially in the altcoins, you can see Bitcoin's down 2.39% and fluctuating, but Bitcoin market dominance is up 0.68%. And it's very interesting because we always talk about just because my poor amp is down 7%. We always talk about that. Even if Bitcoin's crashing, uh, Bitcoin dominance can be rising and altcoins will tank even faster. And you can see that's actually happening today. Form, one of my jabroni killer memories, I've been forgetting about this, is sitting up here after it had that big pump that we were talking about after the big dump. And we gave you that first mover advantage and kept you in a super simple, truthful, and educational way, not a financial advisor, that the price was going to come down back here during the December, January, February. We had a target down here at 10 cents. And then we actually had our ultimate bottom potentially if it broke this 10 cents. And we talked about it when it was up here in December, January, February, that you could come down and retest an all-time low. We came down and we drew this up here when we were back here breaking down, and it actually came all the way up here to the 17 cents, then got beat down and knocked down, and now has been forced underneath the moving averages. And you can see it's been a minute since we looked at this. You can see the 50-day moving average has had a freshly bearish cross back here. Oh, that was at the end of May. It had another bearish cross where the 50 got below the 100-day moving average. And then you can see the 200-day moving average in green is sitting up there on top. But right now the price is below it. And if the price stays below it, that can force you down to what could potentially be a double bottom. And if it's a double bottom, you can come and maybe on this one have a more forceful move to the upside and potentially come up to this 20 cents, right? Where you have 20 cents as your major upper resistance, and then you got your next support and resistance box. That would be a lot of work to get on top of that if there was a bullish push. Or this is going to come down for a potential double bottom and unfortunately lose it. And then that's how you break down to potentially this underneath all-time record low tying, and then that would be again a great buying opportunity because if it did slip and come down here, you would expect a forceful rally from there, something up between the 10 and 20 cents. But that is for another time and discussion. Currently, right now, what you need to know in the next 3 to 7 days is as long as you're below these moving averages, you're going to want to get attracted like a magnet down to 10 cents. And as long if you can get above those, these three moving averages that are stacked and running parallel and almost on top of each other, it would be act as a magnet to try to come up here to the 20 cents. So that's your critical level. And right now you're slightly below it in COREUM. HBAR, the same thing. Look at this beautifully. This is another target we hit beautifully. See this? We still have a 9 cent target down there. But if you understand what we've been following in the HBAR for quite some time, back here we have this head and shoulders topping out reversal pattern. You see this? We diagnosed and sniffed this out and detected this beautifully for you, where we had after the big pump, we had our November pump, Donald Trump top. Then we had the correction, looked like the Bitcoin came up mountain double top. Then we identified this when the price was right in here in early to mid January. Top one, top two. Some call it an untopping reversal pattern. I call it a mountain double top because it looks like a double topping mountain. Then you have your neckline of support, support, support to the point of a breakout. Got you down here to blue or about the 15 cents. Now that you see there, then when we got down there, and you can see it's been a while since we talked about this one too. You can see where the 50, the 100, 200-day moving average is on top, the 50-day moving average is on bottom, and the 100-day moving average is almost on top of it, but slightly above the 50-day moving average right there. But then we came down, bounced off of this critical 15 cent level right here, and we were following it the whole way up, but still continued to think it was going to break down eventually, as we have continued to think all of these coins would. And now this is one of our first ones we've looked at where it's actually come down and double bottomed on a major support level and it's slipping through it. And if it continues to slip through it, it's going to come down very, very quickly and have a double bottom low at this 12.5 cents. And then that would bring in this major underneath target of 0.088 in the play. What you need to see in H bar if you wanted to pump in the short term in the next couple of weeks is you hold at the bare minimum somewhere around here, get back on top of this 15 cents or wick back on top of it tonight or very quickly, and then get on top of the moving averages that are right here and then stay on top of those. And then you can try to form some support and stay bullish, right? So this is very critical in the short term. You want to stay above to be short term bullish above 15 cents, below the 15 cent horizontal left to right in purple there, or actually in blue there, you're very, very short term bearish. The DGB, the same thing. You broke through this critical level, and you can see we are below this critical 0.008. We have fallen fast on a wick, but we have gotten bought back up in the minute time frame. You can see we have our underneath target. Get out of there. We still don't want to buy you. We have our underneath target, which is down here at 0.0059, and that stems from this head and shoulders topping out reversal pattern that, again, old Vincenzo drew out for you back here. We've maintained that ever since. We've had major dumps with local capitulations, like right here. That was a local capitulation. And if we bring the industry exclusive measuring tool, that was a local capitulation in about a week or two of greater than 40%. Oops. Followed by a nice up and sideways symmetrical triangle consolidation where we thought you would break to the downside. You did right here. You broke to the downside. And it's sort of a neutral pattern because it's trading from left to right. It's not trading an up, and it's not a rising wedge or a falling wedge. It's just it's symmetrical. It's just from left to right, a horizontal wedge, and it traded out of it. Actually came all the way up here to the 0.0123, but has been on this major support level at the 0.00837 below the three moving averages would make it bearish, and it's now breached there after 1, 2, 3, 4, the fifth time it couldn't hold it and broke through it. We're currently wicked back up a little bit, but if this continues to break down and can't get back above this 0.00837, and more specifically the three moving averages right above that to be short-term bullish, you'll be extremely bearish to the downside, and you'll fall very, very quickly to get very, very close to that head and shoulders target. The same thing with XDC. You can see it had a phenomenal rally a couple of days ago. If we go into the daily time frame, it had this phenomenal rally the other day, and as you know, when it's in a downturn, you'll have the most ferocious rallies to the upside over a quick period of time, like this did over the period of about 2 days. It went up 18% to try to get you to get back in there, and notice how it did it right after it hit just below, but pretty much that regional double bottom that we talked about that it would come down to when it started to pump up here if it failed to hold the moving averages. Now what you need to do and what you need to watch out for is if you can't get back on top of these moving averages and get short-term bullish, or at least build a base on top of them, these moving averages are going to start trending down very, very fast. And it's going to beat the price down all the way to this underneath target that we've been talking about and the top part of this orange support and resistance box because of that head and shoulders pattern that topped out, right? So that's something to watch out for. There, the XCN continues to slip, continues to be bearish, and continues to be forced down after we had our return rally, after our massive 30 to 40x pump, had a massive 80% dump, had our big pump to put some excitement, but now it looks like the orderly, steady decline is going to continue, and I still do think we're going to eventually hit back down here, uh, about the midway, about the three-quarter of the way down, giving up the pump from the beginning. I still think we're going to get down there, but at first we have to come back down to this major bottom part of this purple support and resistance box. And right now we flush below the 200-day moving average in the daily time frame. We're going to have a bearish cross here in a couple of days. And what I expect to happen now over the next few days, about the next 6 to 8 days, the price chops in this purple trading zone. These moving averages get trending down and get into this purple trading zone in about 4 or 5 days, and that's going to force the price back down, I believe, down here to the 0.00795. Like the channel, we'll get another XRP video on here before the night's over. I had a very busy day, left the house at 5:45, didn't get back home till 7:45. So this was a very busy time. I wasn't trying to neglect you, but we had to do a couple of jobs today. Peace and love. The Rock Eyebrow. J.